Hello, welcome to the European Open briefing for Friday, April the 28th. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we had quite a bit of data releases this morning, though we're not seeing too many big moves in the currency markets, apart from commodity currencies, which continue to be weighed by concerns about the US's protectionist stance. This is mainly affecting the Canadian, Australian, and New Zealand dollars, but we also saw quite a big drop in the South Korean won this morning after Trump criticized the current trade agreement between the US and South Korea. Today's main focus will be on GDP data. We've got first quarter preliminary estimates for GDP growth in the US and the UK. The euro has steadied somewhat. It's actually slightly firmer this morning following yesterday's dip after mostly dovish European Central Bank from yesterday's meeting where Draghi failed to signal a possible shift to a more hawkish stance in the near future. But let's begin now with the dollar-yen pair. We can see the pair has been mostly steady over the past couple of days. The focus will be on first quarter GDP growth, which is expected to show US growth slowing from an annualized rate of 2.1% in the fourth quarter to 1.2% in the first 3 months of 2017. This is mainly due to more sluggish consumer spending, which has been impacted from milder weather in the US. Also, inventories are expected to show a drawdown given the build we had in the prior quarters. But this is expected to be temporary, so it's unlikely to influence the Fed's outlook in the near future. The Fed will meet next week for its latest policy meeting, though they're not expected to raise rates. But today's data, if it is exceptionally weaker, may impact whether or not a June rate hike is on the cards or not. But we also have a bit of political uncertainty in the US. Congress is expected to vote later today on whether they want to extend the deadline on reaching a deal for new federal spending legislation, which expires today, and they will most likely vote to extend that deadline until next Friday on May the 5th. And if they're not able to reach an agreement, it may cause delays to other bills, such as the healthcare vote, which the Republicans want to put that to another vote next week, as they want to get that out of the way before getting on to the tax reforms. But what's been in focus in this week has been the trade disputes between the US, Canada, Mexico, and now that could potentially extend to China and South Korea. Of course, we had the news yesterday that President Trump came close to withdrawing the US from NAFTA before deciding to renegotiate it following a phone conversation between the Mexican and Canadian leaders. Yesterday there was also an interview with Reuters where President Trump called the current trade agreement between South Korea and the US as unacceptable, and also the US is now considering on imposing tariffs on aluminium exports from China, and all of that is also hurting the Australian dollar. The Aussie is not doing too badly. This morning is steady around 0.7471 after dipping to around 0.7440 yesterday. The Mexican peso has firmed a little bit after that dip from the fears that NAFTA may be terminated. The loonie, on the other hand, it actually fell to a fresh 40-month low of 1.3670. against the US dollar, mainly on the back of much a drop in oil prices. And South Korean won, again, that's also under pressure, currently trading at around 1,136, and it could probably fall further if the US decides to renegotiate its trade agreement with South Korea as well. And also the New Zealand dollar has also been hurt by all this trade talk. It fell to a 10-month low against the US dollar of 0.6847 yesterday. It's currently rebounded a little bit to around 0.6866. We had bigger than expected trade surplus in March as exports went up during the month, although that had limited impact on the Kiwi. Looking at European currencies now, yesterday we had the ECB policy meeting. Some analysts were expecting the ECB to be a little bit more hawkish, or to at least signal that at the next meeting in June they may shift to, or they would move away from their easing bias. But Draghi, ECB president, he failed to do that. He said that although risks have further diminish the downside risks for the Eurozone economy, underlying inflation pressures continue to remain subdued and have yet to show a convincing upwards trend. So that pulled the euro down to around 1.0850. It's firmed a little bit this morning to around 1.0888. The pound, on the other hand, is doing rather well. It rose to a fresh 6 months high, 1.2939 a short while ago. And we do have GDP data out of the UK coming up shortly. That's expected to show a slowdown in first quarter growth, and like in the US, consumer spending has been weak in the first 3 months. But investors are focusing on positive developments with the UK's Brexit negotiations with the EU. Theresa May yesterday met the European Commission President Juncker and the EU's top Brexit negotiator Michel Barnier. So that's seen as a positive effort by the UK to get onto good terms with the EU. We also had some comments from EU Trade Commissioner who said that the UK and the EU will for sure reach a deal. So all of that has been positive for the pound. Let's have a look now at the data we've had so far this morning. We can see there at the top the New Zealand trade data. Exports were up sharply from 4 billion to 4.7 billion in March. So that and following a trade deficit in February, there was a 332 million New Zealand dollar trade surplus, and we had quite a bit of Japanese data as well. Household spending actually fell by more than expected, although retail sales beat estimates. We saw year-on-year retail sales growth at 2.1% in March. Industrial output disappointed. It slumped by 2.1% versus expectations of just 0.8% in March. Unemployment rate was positive. It stayed unchanged at 2.8%, beating expectations that it would actually edge up slightly. But the biggest news was inflation. We saw core CPI, which is the measure that the Bank of Japan targets. It was expected to rise to 0.3% year on year in March, but it actually stayed unchanged at 0.2%. And that pretty much confirms the Bank of Japan's outlook yesterday, where they slightly revised down their inflation forecast for the current fiscal year. And finally, what's coming up later today, we've got UK GDP data that's expected to show at 0.4% quarter on quarter. We're going to have flash Eurozone inflation estimates and also US GDP advance estimates as well. We're going to have the monthly GDP figures for Canada, and we've got business surveys from the Chicago PMI and the University of Michigan final consumer confidence estimates for the US as well. That's it from me. Thank you very much for watching and have a great day.